Okay, now.
Okay. Hi, everyone. Fed Day. This is Coach at TradeGATEHub.com, and we're powered by TradeView Markets. A very big day. I want to just go over some of the things we talked about in the last couple of videos. It was my contention that the bond market had not bottomed using the proxy TLT. We're moving sideways, and I was expecting new lows. We have new lows now, and this was going to be the acid test to see which markets would be able to hold up the best under this one more wave to the downside in TLT before we have a nice bear market rally. And a couple of things passed the test, and one of the examples is silver. So silver up strongly today, outperforming gold. But as the bonds went to new highs, you could see that silver may have bottomed yesterday. Okay, gold really didn't pass the test. Yeah, it did. It held 1800, so we never took out 1780. But silver was making its low here. Also, take a look at the gold-silver ratio. To me, right now, looks like a failing rally. It could be a C to the downside or a big 3. It's a money wave, so we should get at least something like this from here, which favors silver over gold. So that was one that passed the acid test. A few other things that did not make new lows. The Aussie dollar did not make a new low. See this? Did not make a new low. And even the beleaguered euro dollar, which is only about 70 pips away from a new low, and maybe it's going to happen on the Fed decision, still hasn't. Of course, the market's made a new low before today's bounce. I had this black line, return, wedge line drawn where it looked like we could go 36.80, but look at where it held it, just over 37. I think that was one of Mike's numbers. Even if the market is shocked a little bit by what the Fed does or says, I would not be short this market. I think that we're setting up for a summer rally in everything. And the key to that is going to be the dollar peaking. You know, you can't say that's happened yet, but the yen, I talked about Monday. So here's the lesson I have to learn. Monday, I talked about that it was going to be a key reversal. Well, you know what? You don't know if you have a daily key reversal until the end of the day. And I'm doing these broadcasts 6 hours before the end of the session, 6-7 hours. So you have to wait for a close. But I look at what's happening here today into the Fed with, everyone raising their expectations to a 75-point raise. And look at how the yen diverged up here. So to me, it looks like the yen has peaked. Not sure about the dollar, if that's peaked yet. We're looking at a real strong 4-hour candle there. The Euro ECB had an emergency meeting. Possible that we're getting a right shoulder here on the Dixie. Maybe it's going to push one more time up to, maybe 105.85 to 6, but be careful if you're a dollar bull. It's another very crowded trade. In fact, I have to tell you guys, I don't know how many are familiar with a sentiment gauge called DSI. Jake Bernstein started it a long time ago, but I've never seen a DSI reading like this in so many different instruments in single digits, like, euro, 7% bulls, right? Bonds, 5% bulls, S&Ps, 8% bulls, yen, 6% bulls. So what do you want to do? Do you want to just join the other 94% here and think that it's just going to keep going? Or when you have everyone on one side of the ship, do you want to join that side of the ship when it's making the boat tilt? Not me. So I really like the action in silver. To me, it's demonstrating relative strength, even with a stable to strong dollar. Survived, the last move down in the bond market, and actually think you have to think about maybe even looking for a counter trend trade in bonds and at least in the dollar, and silver looking pretty good. If we get, we're crossing a lot of moving averages. And if I just do a fib count here, let's just call this $2, this rally off the low, which is something else that we caught during a session here. It's on video, check it out. And then I was saying I welcome one more round of weakness in the metals. Gold, it was a little weaker than I thought. I was talking 1810. It tested it, even took it out a little bit. Gold, as you can see, really needs to clear 1840 for a better signal. But you look at the same TF and silver, and most of these moving averages are coming in up here. I think 24 is going to be a big area. 3.5 is going to be a big area. And how you could come up with 23.5 is this was $2. And if it's a money wave or a wave 3, you should get 1.618 of this $2, which should give you about 320, which is going to take you, up to around this level, 2320 or so. Getting back above 24 is going to be real critical for the long term. But I think in 2022, owning silver will be good for me and will be good for you. You could, find different ways to do it. You could do it with futures. You could buy physical. You could look at miners. Some of the miners pulled back pretty good before this recent bounce here. And BTG is one that I own. Actually took out this low yesterday before we're getting this type of action. And then I was talking about these two silver stocks, and this one bottom looks like it bottomed yesterday, Endeavor. And then I've been posting in our main trading room when we were up here around in here to wait for a break, even on the videos. But look how great this looks in comparison to a lot of markets with, again, I keep coming back to the pressure of one more push in yields. And that push in yields was pretty extreme. So you would think that if these markets were going to fail and make new lows, that it would have done it with what the 10-year did in the last couple of days. Look at that move. So it's intense, right? Right now, to me, it looks like a second drive to a top, and maybe we could get one more above 350. I mean, the RSI is diverging, but at a real high level. Or maybe we're just going to have the market's been leaning the wrong way. I look at TLT, we got down to 108. We could still have one more flush here while it's trying to put in a bottom. And this is really the acid test. You want to be long the relative strength. A few of the instruments that I showed you today. Also, I know that our president's going to go groveling to the Saudis to help us out with the energy situation. And, most people don't think it's effective, but, remember I was talking probe and protect back here with one more jiggle, and crude looks vulnerable to me. And I can't see how the bond market wouldn't like that, or how the inflationistas would try and rationalize. They'll probably start talking about grains of oil caves. They'll find some sector in commodities that is going to demonstrate that inflation is sticky. I agree with them. The Fed can't do a lot with things, agricultural commodities. They're in the printing business, not the planting business. So I think that's about it. You could probably throw your charts away for a little while when the Fed's here. I'd fade dollar strength on the Fed. Maybe we're going to get this one more push to new highs here, but you're going to have divergence here if we get this new high. And US dollar yen, if they have the fuel for another new high, I would short the yen as well. Just looking to stay long. Gold and silver, I'd buy any pullbacks that you have here. And next week is the beginning of summer. So, we had a spring of everything pretty much going down together. I'm looking for a summer rally in the indexes, even if there was one more shot down for a 3 drive down here, but that doesn't have to happen. So I think we're going to have a nice summer rally in equities, and that bonds are going to be relent from this pressure and start to put in some type of bottom. A break in crude would be a tailwind for everything except oil shares. Would take pressure off rates. And if that happens, things could look a little different going into the fall. But I think this could be the summer rally of everything, just like we had the spring decline of everything. So solstice next week, beginning of summer. Strongest conviction for a bottom pick remains silver. Good luck, good hunting. Better to react to the Fed than try and guess. Unless you're holding major positions, you have to learn how to, if you're going to be a position trader, you can't keep getting in and out on every red event. If you're a scalper, yes. And who knows, there might be some scalping opportunities today after the Fed. But I want to remind you of something, that the markets will be here after the Fed. Make sure your equity is. And there's nothing wrong with doing nothing and waiting for the dust to settle and for a setup to hit you straight in the face before you're compelled to take risk. Great surfers don't try and catch every wave. They too wait patiently out there for the right setup, and great traders are patient as well. So thanks for having the patience to listen to me for 17 minutes. And I believe Mike will be on in an hour and 13, and I'll be back in main chat around Fed time. And if you're watching us live on YouTube or you watch recording later, appreciate the like, and hope you become a subscriber. It's free, and coming into TradeGATEHub.com is free. Iron sharpens iron. Remember, don't just count your pips, count your blessings. I want to thank Andrea for helping us with our broadcasts here for the last several months. And she's been great to work with. She's always happy in the morning, which is different than, traders can be kind of moody. So, Andrea, wish you a lot of success on your next step. And Mike, I'll be listening to you, and glad to be part of a great team. Adios, everyone. Good hunting, good trading.